Hey everyone, welcome to the Your IRA Daily Market Update. So happy Aloha Friday, all you traders. What an interesting market day today. After starting out blood red, even after getting a great GDP number and some other good earnings, well, there was a bad report from Intel, kind of rocked the market a little bit, right? We got a little beat up. But the markets in the afternoon just really showed some resiliency and closed super strong. You can see the Dow ended up 81 points, the S&P up 13, the NASDAQ another 28. The Russell, the small caps are participating. The VIX is right back down below 13. It's a very, very good, strong market right now. In our live trading room, we've been kind of playing the cues. We finally had a loss today. We do win, we do lose, but the truth is everybody loses some, and we're not too big to admit it, and we lost a Q trade today. But we won the other 3 trades this week. So winner, chicken dinner. How you guys doing out there with your trading? Let's go take a look at the market together. Let's start out with some charts here. So, I want to start out with the SPY chart. SPY, of course, is your S&P ETF trust for your S&P 500. It mimics the S&P 500, but look at that chart. That's a year chart, man. Isn't that impressive? We had that big V bottom, of course, December 24th. We had the capitulation, big race up there to the top of that Fibonacci channel. Then we finally got a little sideways motion, good positioning here and a breakout. Now we're really at a inflection point, and it's going to be interesting to see how this shakes out. The market showed some incredible resiliency today. We started off the day with some bad earnings that just rocked the market. The GDP number came out. It couldn't push it green. It looked like all was lost on the day, right? It looked like people were unwinding rather than building positions, expecting great economic growth and stuff. And in the afternoon, it just kind of changed. Let's look at a 5-day chart here. That's your day today. So that's where you opened up and you just ran. And you can see it was a really interesting day. We're nice over the moving average. We're getting a little bit oversold, or overbought, excuse me. But we got great momentum. The volume was decent today. So let's plan for more rally here. We think that, like, today, it's a big sign. Sometimes you have to gauge the psychology of the market and as much as your technicals. And really, we felt as a team over here that today really showed that people are believing the economic reports, that yes, there is still a certain faction that is trading CNBC, which means they're in a market recession, earnings recession. Interest rates are going through the roof in their mind and things like that. Probably the imminent crash of the dollar in there too. And so, there's a part of the market that's still trading that. And that's going to be your FOMO trade when they start waking up and seeing, look, if they had been smart, if they'd got off their hands, they missed out on all these gains. So right now, we're still in our same plays. Our monster play is just going crazy. We're now up 160% on this trade after a few days. And look, Monster's got earnings on the 2nd, which is next week, and the stock's on fire. So we'll ride this towards earnings at least, and then we'll see if we cash out. But right now, we're at 160% win just in about a week or so. And so that's a beautiful trade. Our oil trade got a little beat up today. You can see it there. But we're right back down to that support channel. We're going to give this time. We're all the way out till summer. A little bit of verbiage from Trump. Supposedly, he called OPEC and demanded they lower prices. I got bad news for you, President Trump. OPEC doesn't care. And, but the psychology of it, again, people started dumping oil. So we're going to stick with this play. We're at those $20 calls. And if anything, we might average into them because we like this play. Our steel play, still trying to find a base here after, what's going on here? Why aren't we? There we go. Still trying to find a base here after that little rocking it got. This was all, we had the X downgrade there that kind of carried it down. Then we had Cliff had a bond downgraded. It kind of got hit there, and then we kind of washed through some sentiment. We're waiting to see a bounce here. We're in some $5 calls all the way out to January. So we got plenty of time on this. We got some $3 calls that are about a month out. We're just outside the money on that. We'll let this thing come together. We're right there at the bottom of that RSI. So let's see if we get a nice push up to the top. We're liking the stock. We still like this. I know it looks a little ugly, but technically it came right down to the support bounce. And it's still really in that channel. So we'll give this one some time. Our other trade, what else are we in here? We are in retail. Retail starting to look good. We started getting some good action the day before yesterday. We got a little slowdown yesterday. Pretty much across the board, the market was soft. But nice bounce back today. We think as these retail earnings come in, that's gonna be the difference in this play. We're just right here in the money here, right at that top there. So, and we've got about 3 months on these contracts, so we're loving this one too. Maybe we average into it, maybe we'll know. We don't make those decisions till we see some true action on it. It doesn't make sense. There's an old saying, gang, for new traders. Always remember this saying: never throw good money after bad. Now, this is started out good money, and it's still good money. It's a play that's in play, right? But if this doesn't hold or it doesn't break out, then it becomes bad money. If you put more money into it before you're sure it's going to break out, then you're throwing good money after bad. That's the lesson there. So you wait and let it show you. Like, we could have bid into it over here. You see where it started to break out, but it failed real quick, right? So that would have been throwing good money after bad. So we'll let it do its thing, and we're sure it's going to break out here pretty soon. So we'll be patient with that. The VIX. Let's take a quick look at the VIX, because look at that bad boy. And we've tracked this from before when we were in that mega bull market a while back. This is where it traded in these two yellow lines. So, and that's why we're watching those yellow lines. So let's extend them a little bit. It was a busy trading day today, so we got a little behind. But you can see, as long as we're trading that channel, we are in bull mode. So, follow your technicals, stick with your charts. Charts never lie, and stay patient with your trades right now, because it's easy to get shooken out, gang, for you new traders. It's really easy to get shaken out right now by these soft days. So be smart about your trading. Other than that, we've got a couple plays on the side that we do. We like GE. We've been buying GE all we can under $10, and we've got a nice move from GE right now. We think this thing is going to just have a really good year. It's getting started. It's only paying 1 cent dividend, so that's not very exciting. But there's an opportunity here to buy a great company that's been beat down, that's at a bottom. So it looks like it's absolutely holding that cup and handle. Got a little discombobulated on the handle. Sometimes that happens, though, especially in a volatile stock like GE, which is so news driven. But we're in that channel still on that handle, and we're getting a nice bounce at the bottom of that channel. You see how it bounced so strong off that bottom? That's what you like to see. Show a little fight there. And that's one of our favorites going forward. I just wanted to talk to you about a couple ideas, right? We got a couple regular viewers like Jeff out there. Jeff likes Iridium. Let's go take a look at Iridium together. Since it's Friday, let's look at some charts together. That's not bad, huh? Look, Jeff, I remember a couple months ago you were talking about buying it down here in the 20s. Well, you're at 27 now, so great play, brother. Way to call it. Jeff actually, in the comments on this show, was saying, buy the stock here, buy the stock here. It turns out Jeff was right. Good job. Other than that, I know, Jeff, you like Tilray, right? And Tilray's just kind of been in a funk for a while. You can see it's in this long base, little trickle down. Looks like it might be getting some support here, though. We'll see how that shakes out. We always keep an eye on Tilray because it's kind of a high-profile pot stock, right? But we don't have any plays in it. But if you're building a position, if you're confident in the future, this is the time to get it. Other than that, look, I wanted to talk to you about the end of December in the live show. We offered a free pick, one free pick, because we were coming off that hellacious market sell-off. Everybody was sad. Everybody was depressed. So the service wanted to do something for all you loyal viewers. So we gave you an option, right? We gave you the Apple 290s, right? The January 290s. Those are up 110% now. So you could have bought those for $32 cents. When we made the call. So that was a free one. You guys pay attention when we give free picks. We might have one next week, so maybe you want to tune in. Anyways, gang, look, let's go take one more look at the news. See if anything exciting happened since we've started yapping. And you can see S&P 500 and NASDAQ closed at record highs after strong GDP report. Nobody would have thought this morning that we were going to hit that record high the way the market was rolling about halfway through the day. But it just showed that bullishness. So we're going to stick with the bullish trade for right now, but we're going to trade very cautiously. Again, we're at the top of that V. So we don't want to make any crazy moves. We want to be very smart. It's a stock picker's market. Okay. That means there's going to be winners, there's going to be losers, but it's not going to be a rising tide floats all boats situation, we don't think. Other than that, it's Friday, so there's not a lot of earnings reports. Actually, I don't think there's any today. We'll get back to it on Monday, okay, gang? We've got Apple reporting on Tuesday. We've got Monster reporting on Tuesday, which I told you we're up over 160% on that trade already. And rocking. So, we're looking at it like maybe we're going to get a big one out of this one. So, you guys stay safe over the weekend, okay? You guys have a happy Aloha Friday. Like I said, we're still bullish on the market. We give you a couple trade ideas there. Jeff, thank you and good call on the Iridium. That was a great one. If you bought it at that $20, you're up at $27. And that was just one of the viewers' comments. So, look, if you want to get on a great team, if you want some support, if you want to learn something, if you want to trade with people who are trading their money while you trade your money and we all just make money together, click that link on the bottom, WIRA.com. Other than that, while you're down there, read the disclaimer, okay? It's got all the important information. And what is that important information? We are not registered investment advisors. Nothing in this show should be taken as an offer to buy or sell any security. Shows for entertainment purposes only. And always consult an advisor before making investment decisions or a professional. We are not considered professionals, okay? So you guys have a great weekend. We will see you Monday after the market. It was a fantastic week. Record closes. Now that we've got that record, it's time to really do some good technical analysis and see where we're going to go from here. All right, gang, we will talk soon.